So I'm going to go ahead and assume that you're already aware that investing or owning an asset, owning a business is probably the only way to a life of financial freedom, financial abundance. I'm assuming that you already have read or glimpsed or glanced upon Robert Kiyosaki's book, okay? Which is typically the book that a lot of people read that opens up their mind towards investing and stuff like that. But anyway, let's go with the title, what I said the title. So I've studied 5 billionaires consecutively in terms of just trying to understand how they invest, what makes them tick, why they think the way they think. Because there's a law that says that if you study someone or try to imitate someone, you're probably only going to get about 10% as good as them or 1%. So if I'm going to be 10% as good as someone, if I'm going to be able to attain 10% of someone's wealth that I'm trying to mimic, I'm going to go ahead and take that time to study billionaires instead. So because if someone's worth 200 billion and I'm consecutively studying that person, I'll make just 10% of that 200 billion, we still make something right there. We made 20 billion, that's still good money. If we're studying people who are just making hundreds of millions of dollars and we make 10% of that, 1% of that, that's really not substantial money to really be able to live a life of abundance from our perspective. Because one car is worth $5 million. Hey, your money, your net worth is already down the drain. But nevertheless, so there's really two main things that I'm consistently seeing within billionaires when it comes to investing, okay? And these billionaires basically are, I'm going to name them. One of them is really going to be Al-Waleed bin Talal. So they call him the Warren Buffett of Saudi Arabia. Okay, this guy's literally worth $30 billion. This is what I'm going to go over. Of course, these investing rules are from people also like Ray Dalio, worth 15 billion. I think this number is pretty wrong. I think she's worth like 30 billion. And we have Stephen Schwarzman also worth 3.8 billion right now, but that's rounded to about 40 billion. Okay, we have Warren Buffett worth 100 billion plus, Charlie Munger worth 2 billion plus. And basically, I'm just gonna compile I'm gonna extract the two main learnings that I've learned from these individuals when it comes to investing. Because one thing, even though I'm repeating, beating a dead horse over here, life is really patterns. Life is really, really, really patterns. If you sit down and have a pen that you use to write on a pad, and you track every 30 minutes of your day, you come to a realization that you're really doing the same things over and over and over and over and over. So with these billionaires also, they're doing certain things over and over and over that's specifically giving them these outcomes. Okay? And the first thing, of course, or first rule or pattern that I'm seeing with these people is that they all have this firm belief of never lose money. Okay? And it might sound a bit cliche, it might sound a bit weird, like, I was hearing Ty Lopez when he was at a farm with, I forgot his mentor's name, Joe Salatin, his first mentor. Joe Salatin was like, I have only one rule. And Ty Lopez was like, okay, no problem. What's the rule? And it was like, and basically Joe Salatin was like, never make any mistakes or never fail, basically. Right? And, Ty Lopez being young is like, oh, man, what the hell do you mean? Never fail, never make a mistake. I'm like, that's impossible, But it's possible to an extent. The same thing goes with never losing money. How do you go about never losing money? Well, actually analyzing whatever you're about to do, taking insights, inputs, making calculated decisions, okay? And planning. There's something called Six Sigma, which is something I also learned from Ty Lopez, number one, and then I learned from basically Jack Welch. So I'm assuming Ty Lopez learned from Jack Welch. But Six Sigma is basically a practice that enables and reduces the chances of failure within a business. There's different kind of ones. There's specific ones that the Army uses, and it's sitting down, and what you're basically doing is you're imagining the best case scenario, how that's going to happen, what you're going to do, what's likely to happen, okay, and then planning for what you're going to do if that happens, and then planning for the worst case scenario, and imagine what you're going to do as a repercussion if that basically comes about. bear with me with my explanation. As time goes on, we're going to enhance our ability to be able to communicate and convey a message to you. So I'm working on that, so bear with me. Hopefully that number one right there was a bit clear, but it's basically setting up a redundancy in things that you do. Okay, having a backup plan for your backup plan. Okay, never lose money. That's really, really the number one. And number second rule that I'm basically seeing that I've derived from just listening, looking, studying these billionaires is really understanding that investing is like an oscillation. Okay? Any market is like an oscillation. It's up and down. Since any market is up and down, you need to be able to dictate and predict an up and down trend in a market. And how do you do that? By looking at the history, because history rhymes. Maybe it doesn't repeat itself completely, but it does rhyme. Okay? And basically how these people are able to make substantial amounts of money, returns on investment, and so on and so forth, is by actually analyzing what's going on with the current state of the economy. Okay? They look at what's going on based off what the news is. I mean, I was watching a documentary about Al-Waleed bin Talal. This guy has a newspaper every single day in his hand. Like, every single day he has a newspaper. He's taking information. Like these people are, that's why Warren Buffett and what's this guy's name? Bill Gates was asked if they could have one superpower, what would they, like if they could have one superpower basically, what would it be? And theirs was like to read more faster, if I'm not mistaken. To be able to consume more information at a faster rate. Because information, the right information, right? It doesn't really matter. Information at any level is what's going to dictate the decisions you make. What you input is going to dictate what you do. Because these people, with these investments, one thing I'm consistently seeing is that it's not because of their tech savvy, their entrepreneurs. No. They're able to predict trends, and some they can even create the trend by doing something within the markets, depending on how much capital they have, that increases. For example, how 2020, how GameStop was going skyrocketing. That's basically a demonstration of someone actually creating a wave, because they were dumping a lot of money into the stock, which basically, increased the value and all that kind of stuff, and everybody also putting money inside of it. But basically what these investors do is that I want you to, if you're listening to this via podcast, my apologies, but just look at the S&P graph for the past 10 years. Okay? This is the S&P stat for the past 10 years. Look at the peaks and troughs. That's what the British people say. Look at the ups and downs. This is all these people do. They look at what's going on in the economy in terms of the bonds, in terms of the gas, in terms of the oil. They look at all this stuff. Because a lot of times, if land is overpriced or the gas is this, certain things in the economy dictate what's going to happen to other specific markets. You get what I'm saying? They look at all these patterns, and the more patterns they look at, the more it kind of becomes systematic due to, we have something in our head called a basal ganglia. And the basal ganglia basically is like a motor in our head that after you do something repetitively over and over and over, you stop needing like your head to do it anymore. For example, driving a car. If you've driven a car for 5 years now, and you compare it to how you drove when you started, it's completely different. You have some people driving, calling, one leg out the window, listening, playing with their girl, and all that kind of stuff while they're still driving. Why? Because that motor in their head, the basal ganglia, has now been able to literally be able to drive a car without the individual needing to be present or their mind being fully attentive. It's happening what they call subconsciously, basically, right? The same thing with investing. These people, they look at these patterns with these charts, and they get so good at it to the point that they can be able to, quote unquote, predict what's going to happen within the markets. So for you and I, for example, since we're not completely equipped, we haven't yet trained our minds to an extent to actually be able to see these patterns without us being completely focused on it. We have to do it consciously, and eventually it's going to be ingrained in our mind. It's going to become into our being. Because don't mistake it, the same way you see athletes, You see these NASCAR drivers, these horse people that are so great at what they do, is because they've done it so much that it's become a part of their nature. The same way we drink water without thinking, oh, I gotta take my hand, catch the cup, put it to my mouth, steer a little bit this way, drink, let it go down my throat. The same way it's automatic for us, that's the same way these people is automatic when it comes to investments. I'm telling you. Okay? But basically, I'm not kind of on a tangent there, but it's really two main rules that I'm seeing continuously over and over. Number one, never lose money by basically setting up redundancies, analyzing stuff properly, thorough analysis, and so on and so forth. Number two is basically, when it comes to investing, is really knowing when not to invest also. I forgot to mention that. When not to invest. Because as Warren Buffett and Charlie Munger would say, it's really not about always trying to buy a business, invest into a business, make an investment. No. It's about loading up and waiting for those too good to let go deals and investing all you can when they come. Because they will come. Just when you look at the S&P, it goes up and down. So no matter what, peaks and troughs, ups and downs will come. And if you're loading, you're not someone that's always trying to make an acquisition or all that kind of stuff. You're loading up, analysis, waiting for that right moment to feed into it. Boom. Right? Because like Warren Buffett will say, a rising tide lifts all boats. And you can literally, like, if you're on a swing, if you've ever went to a park before, and you're pushing someone, or you're pushing yourself on a slide, no, not a slide, on a swing. Okay, if someone's behind you pushing you, okay? If someone's behind you pushing you, and every single time you're going to go forward, that's when they push you, you got to close your eyes to kind of imagine this. If you're sitting down, and this is going to be a bad explanation, but bear with me. If you're sitting down in a swing chair, or a swing, and every single time you're going to go forward, like, now you're going to go up in the sky a bit, forward, basically, like, I'm explaining this badly, but every time you're sitting and someone's going to push you, and the only time, let's say hypothetically, the only time they push you is when you're about to go up. Okay? Now, this explanation right now is something that you got to see visually, so it's probably not going to be a good example. But hypothetically, if you have a kite, the easiest way to have the kite go far is by in an environment with wind. This is an example I wanted to give before, but I just didn't because I felt like it was too simple. But if you're in a place that has a lot of wind, it's blowing vigorously, and you have a kite, the chance of that kite going far is very, very, very high. But if you're in a room where you have the kite, the chance of that kite ever going anywhere is slim to none. So you need to be, what I'm basically trying to say is, what I'm learning, what I'm going to apply to my life, and hopefully it can benefit you if you apply it also, is the trends. You got to find what's happening in the market, because essentially you can only do so much. If there's no air, there's only so much you can do to fly a kite. If there's no need or demand for your service, there's only so much you can do when it comes to selling, right? And so on and so forth. So these just really are two main rules that I'm seeing that I've derived from these main investors. And this is what it really comes down to. Once again, never losing money, have redundancy. Number two, making sure you load up for the waves and then surf when they come. Because investing is a whole lot about waiting for right opportunities, being able to know when you see right opportunity, of course, by studying history and so on and so forth. That being said, this is Robin, and love you.